Today about BPS in Colorado and the Energize Denver and the Building Performance Colorado ordinances. Thank you for joining us. I'm Marika Erdely, principal at VCA Green. VCA is a division of VCA Consultants. We have offices in LA, Orange County, Honolulu, and Denver. I come from a financial background, 15 years in the energy consulting business, recently sold my company, Green Economy, to VCA Green. So I am now here working with them. So we're very excited to be giving you this information. I'm joined by Jessica Anderson, who's from our Denver office. Jessica.
Hi, I'm Jessica Anderson. I'm Senior Sustainability Manager here at the Denver office for VCA Green. My background is in intersection between sustainability, project management, and business. I've worked over 10 years in the sustainability space, and currently I like to think of my job as a sustainability interpreter to help clients and whether it's owners, contractors, or engineers or architects understand complex sustainability topics and break them down into bite-sized pieces. I work primarily in new construction, but also some experience in operations and maintenance for existing buildings. I'm going to hand it back to Marika.
Great. Thank you, Jessica. Just so everyone knows, a little housekeeping here. The webinar will be recorded, so you will be able to receive that. We will also send the presentation slides, and feel free to ask any questions you have via the chat, and we'll answer those at the end. All right, what are we going to talk about today? We're going to talk about why building performance matters, policy overview, what's really happening here, show us the money. Is there any money out there? And then the live Q&A. So why building performance matters. So I think of this as an energy strategy. I come from 30 years as an accountant. Green Economy, when I started, that was all focused on these benchmarking laws and BPS standards as they've come about. And in these last 15 years, I've noticed that really energy is no longer just an operating cost. It's really becoming a significant factor in asset valuation. It's, as an example, right now, Colorado's electricity prices have doubled since 2001. That's pricey. And now there are over 50 jurisdictions that have these energy disclosure and building performance standard laws, also known as BPS. Investors, lenders, tenants, everyone's taking a little bit closer look at what's going on with energy performance. In fact, investors are requiring certain REITs and certain owners, especially European owners, to really track this energy usage and report on it. It's big business now, GRESB, all these different reporting requirements. So there's a lot of focus on that right now. So here's an interesting graph of what is going on with the demand. Why are we even looking at this? Energy demand is increasing throughout the country. You can see here just specifically in Colorado, the red line being energy consumption and the green line being cost of kWh in 2023 dollars. You can see both are going up significantly. That energy usage that's going up in the red is very significant to why there are incentives that the cities and states are providing because they need to have that energy come down, or they're going to have to continue to build new infrastructure, and that costs a lot of money. So why is it growing? That demand is driven by a couple of three different areas. One is just the electrical demand, right? There's EV charging is a big piece. I was at a conference recently, and we were talking about in the city of Seattle and state of Washington, all that hydro energy that was fine. It was covering the consumption rate of what the cities and states were demanding. But now with the rise of EV charging, all of a sudden there's more demand. So now there's all this infrastructure that needs to be built. Electrification. This is a huge area that these BPS laws are focused on. Electrification means that we're removing gas consuming appliances and equipment out of buildings. What does that mean? Well, electric usage is going to go up. Instead of a furnace, you're going to, and an HVAC system, you're going to have a heat pump. Heat pump can heat and cool electric water heating, not just gas boilers. That's also going to increase electrical load. AI data centers. This is a huge area. When I was at the Greenbuild conference recently, they were talking about one of the main reasons the cost of energy is going to go up is the demand because of AI and then also climate factors. So the demand, then the rising demand, then results in an increasing cost, just like in any economic analysis here. The infrastructure demand, as I had mentioned, more people using energy, you're going to have to build more. That's going to cost modernization. That means the costs are going to go up. You have the climate factors, the wildfires, all of that requires additional costs, and then market volatility. And let's not even get into the socio-political instability that's happening. And number three, really, is this transparency and awareness. What is going on with these local benchmarking ordinances and building performance standards? They're coming up everywhere. This public energy disclosure that investors are demanding. What's going on with your assets? Reporting on it. California's new SB 253 for corporations that have over $1 billion in revenue and do business in California have to report now. Insurance companies are looking at this for underwriting and risk assessment, and then there is obviously a valuation impact related to the NOI, net operating income of a property. So, what are these benchmarking laws and what are we talking about? So, you can see here this policy overview. We're looking at these benchmarking laws and if our strategies for cities and states to have develop a climate action plan to reduce energy use, which then reduces emissions. Inefficient buildings, which about 40% of the emissions that are out in the atmosphere come from commercial buildings, and inefficient buildings create more emissions. So having buildings more efficient means less emissions out into the atmosphere, which then affects all of us, right? And the first phase of these is the benchmarking itself. You can see that with the green dot and the light blue dot. These are the ordinances or jurisdictions across the country that have this phase one, which is generally about between 20 and 50,000 square feet. Buildings have to report their energy, sometimes water, in the Energy Star Portfolio Manager software, and these phase ones are generally having to be done annually. Then there's always a phase two, almost always. You can see by the blue, dark blue, and the green dots, this is the building performance standard. This is where you have to either report that your building is energy efficient or that you've reduced certain energy or GHG emission reduction requirements per the ordinance. Every one of these, the building performance standard is based on the data on phase one for that benchmarking. So the accuracy of that benchmarking is going to drive everything else. So make sure that that is accurate. I thought this was interesting. I just wanted to see, since I started my company 15 years ago, Green Economy, there were very few of these benchmarking laws. You can see it started in Washington, D.C., New York, and Seattle. And as we've been running the business, and now it's been acquired, you can see that the acceleration of this area of benchmarking and BPS standards has radically increased. And I find it interesting that even though the federal focus on this is very minimal and probably negative, the states individually are very focused on it. So what is benchmarking? So let's just get into a little bit about that so everyone understands the basics of this phase one. This is a really interesting report that I like to pull right off the Energy Star Portfolio Manager software. It's called a Progress and Goals Report. It's by looking at your building's performance. We're generally looking at 12 months of data when we're reporting January to December. We're always looking at the prior calendar year, and then the reporting is generally either May or June the following year. So we're focused on utility data, information about the size of the building, the year it was built, the occupancy, the building use type. As you can see, this is a multifamily building. The site EUI, and that's a really important one because a lot of these ordinances for BPS are focused on the reduction of site energy use intensity. And what that is you're really looking at your building's energy use on a square foot basis. The software converts your electricity, which is kWh, and your gas, which is in therm, and converts them both to kBTU, adds them together, divides by the square footage. The lower the number, the better here. You can see this is calculating here on a 39.9 site EUI is not bad for a building. So this data, and then you also have GHG emissions. This data in Energy Star and benchmarking is basically it's data, right? Data is king. We're trying to really understand how your building is performing. These metrics help make you allow you to understand that, especially if it's done accurately. And then you can focus on, am I better? Am I worse? What's going on? I've done a retrofit. These metrics help you understand if you're going in the right direction. All right, now I'm going to pass it to Jessica to give us a bit more information about what's going on in Colorado and Denver.
Thank you, Marika, for explaining the why. Now I'm going to go into how this is going to affect you. So, Colorado has their overall building performance standards and called Building Performance Colorado. And the what of it is that first phase, the Energy Star benchmarking, like Marika was talking about before. And then who's affected is buildings that are existing buildings that are 50,000 square feet or larger. So there's that phase two of the building performance standards with the components of ongoing maintenance and penalty enforcement. So what does that phase one consist of? Well, we have the benchmarking requirement, like we talked about. So annually reporting that energy use in Energy Star Portfolio Manager. Then the benchmarking metrics are the Energy Star score, the site EUI, and the greenhouse gas intensity. And in the previous report, Marika touched on where they were located in the report. The deadline to report has been pushed back to this November. So you need to report that data by November of each year. And this is a true saying of you can't improve what you don't accurately measure.
That's true.
So looking at the overall program of Building Performance Colorado, they have that goal to reduce all emissions across commercial buildings by 7% in 2026, with that final goal of reduction by 20% in 2030 relative to that 2021 baseline. So phase two, that BPS compliance pathway, there's two different pathways you can pursue. There's the energy efficiency pathway, where you have to meet the site EUI or the greenhouse gas intensity targets based on that building use type. And then there's the standard percent reduction pathway, where you have to achieve a site EUI or GHGI emissions reduction of that 13% in 2026 and 29% in 2030 from the original 2021 baseline. And if you need to request a different energy efficiency pathway adjustment, third-party verification must be submitted for every year of that benchmarking data to validate that. And then another thing of note is the deadline for building owners to change their 2030 compliance pathway without additional documentation is November 1st, 2028.
I find it interesting that that it's requiring third-party verification because in the initial benchmarking laws that were put into place, that wasn't a consideration. But what's happened is a lot of people, or that some service providers, or some people don't know what they're doing, and therefore, what's happened now is they're like, no, no, we need to verify that the data is correct. So something to consider. You got to do it correctly.
And everyone wants to know about exemptions and waivers. There's a imminently approaching deadline of May 1st to file for any exemptions if your building meets the criteria. whether it's industrial, manufacturing, or agriculture. There's some other exemptions as well that we haven't listed, or if it was unoccupied for at least 30 consecutive days in the previous year, or it's under financial hardship. So that's this Friday for anyone on this call. Penalties. We all want to know what the penalties are. The benchmarking penalty, the failure to report, so there's two different components. There's the benchmarking penalty and the BPS penalty. So the benchmarking penalty is that failure to do that annual reporting, submit a waiver, or pay that benchmarking fee will result in that $500 fine for that first violation and a $2,000 fine for that subsequent violation. And then there's the building performance standards penalty. So failure to demonstrate BPS compliance will result in that $2,000 fine for first violation and up to $5,000 for that subsequent violation. Um, also of note, paying the penalties doesn't mean you comply. Uh, and it might not seem like big numbers, but if you have a bigger portfolio, those numbers can kind of add up.
Very much. I mean, those add up.
Mhm. So moving on to the Denver regulations, so Energize Denver. It's similar in the BPC, but there's a few key differences. With Energize Denver, you still have that annual benchmarking and building performance standards with that phase one of that third-party verification. And then who is the existing buildings, the 25,000 square feet or larger. So it's a smaller footprint and above that has to comply. And then the existing buildings of the 5,000 to 24,909 square feet. So the majority of our conversation is going to focus on that 25,000 square feet and above um, building footprint, but the buildings that qualify in that 5,000 to 24,999 square feet, there's two ways to comply to the benchmarking laws. The lighting, two ways to that you have to both comply with both is the lighting requirement that minimum of 90% of the building's total energy load is provided by LED lights, or that all lighting meets that 2019 Denver Building and Fire Code for lighting power density. The second component is improving the energy source, so utilizing on-site or off-site renewable power energy generation to meet a minimum of that 20% of buildings' annual site energy usage.
So
You'll
we're going
note,
to talk about, one sec, I'm going to
okay,
talk
go
about
ahead.
that because a lot of people seem to think that the federal tax credits have expired for that on-site renewable power. So stay tuned. I'm going to talk about that. Sorry to interrupt you there.
Oh, no worries. Uh, so there's three different deadlines for building type based on size. The one that passed this December was the 15,001 to 24,909 square feet. The one upcoming this December is the 10,001 to 15,000 square feet, and the one in 2027 is 5,000 to 10,000 square feet. So going back to the larger buildings, so the 25,000 square feet and above, we have that annual benchmarking requirement to report using the Energy Star Portfolio Manager. You'll notice this deadline is sooner than the BPC. It's required by June 1st of this year. And also there's that third-party data verification component. So there's two components of the benchmarking reports because they need to be verified twice. So you have that either 2025 or 2026 to confirm that correct building information and use type. And then in the building's final BPS target year, confirm that final performance standard has been met. And data verification is also required when making target adjustments. So for targets, the final performance targets are based on that building use type. Interim performance targets are determined for that straight line trajectory. Buildings have the option to opt into this extended timeline that you see in the slide for the 2025 benchmarking report. If you did not opt in 2025, you are now in the original timeline. So the 2024 interim target, the 2026 interim target, and the final target in 2030. If you opted in 2025, then you have that timeline extension of 2028 interim target and 2032 final. Just something of note, there is a cap to the maximum percent reduction, and that's 42% from that baseline year, even if the final performance standard requires that greater reduction. So this is the straight line graph showing the compliance timelines based on the 2019 baseline, and then the interim targets based on the timeline extension and the original timeline. And please note, the site EUI is supposed to be reduced by 30% for all commercial buildings. So we wanted to kind of show you what that would look like in the tool. So we took an example building, a 60,000 square foot building at that baseline year of 2019. You can see that baseline EUI of 56.1, the 2028 target of the 50.7, and that 2032 target of 44.2. It's neat that they have this tool so that you can see where you are in the compliance cycle, and you can see based on your building type how close you are to reaching that target from your annually reported data. We all want to know about penalties, and maybe we don't want to know. But these seem like small numbers. We wanted to show you graphically kind of how it can add up over time. So the next slide, please. So the cost of no action, uh, you can see that the fines do add up. So potential fine without reduction is that 74,498 and 89 cents. And then by 2032, it's 164,173 and 42 cents. So the costs can really add up if you're not taking advantage of um, trying to make those reductions in a timely manner. Also, there are incentives to help you with some of these changes because we all know that capital expenditures are costly, but that's something that our team is talented about navigating. Um, we can move to the next slide. So for this sample building, we have the estimated reductions. So that first target, an estimated reduction of that 10%, and that final target with an estimated reduction of 13%. So just showing you visually how that plays out with the extended timeline.
What's important to note here, as I had mentioned, is that site EUI is both your energy and your gas, right? Calculated
Mhm.
into kBTU. So if you are to change out an existing boiler that, let's say, has an 80% efficiency with a 96% efficiency um, gas boiler, or most likely a hot water heat pump, all of those metrics go down, right? And that's what they're trying to get to. They're trying to reduce those emissions that are coming out of that old inefficient equipment, and to reduce that and reduce those site EY metrics.
So with hitting that target, you can see there's that 21% reduction overall in site UI from that baseline. You look at the interim target, and that's where that 10% hits for that reduction, meeting that 2028 target, and then that 13% reduction to meet the 2032 target. So just to give you an overall expansive view of everything we just talked about, whether you're following BPC Colorado or Energize Denver, um, you still have to comply with this reporting cycle. I will mention that if you comply with Energize Denver, you don't have to comply with the BPC Colorado. They take it as an exemption. So just to have that of note. So you still are doing that annual Energy Star benchmarking each year. And then you have the extended timeline and the original timeline, and then the building performance Colorado targets. And
Hey,
I'm gonna pass it
Jessica.
to, yeah, pass it to Marika so she can show you the money.
There's a lot there. I'm surprised those are pretty significant reductions to be made. So let's talk about where some of this funding can help come from to help you pay for those reductions if you do need to do them. One of the things is PACE financing, property assessed clean energy. It is a basically an assessment that's on your property taxes. It's funded by a bond in your city or state. I did confirm that Denver and Colorado have PACE financing. It can pay for your retrofit. It can be part of your capital stack. It does also could be covering any seismic retrofits that you require. Uh, in general, there's no cash out of pocket. Everything that you're doing, your audits, your solar, your LED retrofit, your new heat pumps, all of that could be included, and you pay for it through your property taxes. Kind of an interesting approach, and you can have the terms can be 10 to 30 years. There's a lot of different PACE financers out there right now. Generally, projects have to be about close to $2 million to get the financing, but that can add up pretty quickly in a large building that hasn't had a lot of things done. So it is a way to help pay for these. One benefit and or negative is that it does transfer with the property if you sell it. So you could buy a property, fix it all up with PACE, and then sell it when the loan goes with the property taxes to the next person. A hurdle is that a lot of senior lenders don't want to approve PACE in first position for the lending stack, but there's some that do. And lucky, there are some grants and incentives from Energize Denver. There are energy audit rebates that they'll pay for, and even they'll retroactively pay for them after November 17th, 2022. So if you've already paid for one, reach out, you could get reimbursed. And then they have this electrification project implementation assistance. Again, this reminder, this is removing all gas consuming equipment out of the property, gas stoves, gas water heaters, uh, gas pool equipment, anything like that. So there is assistance in helping make that happen. And there are there's stacking with rebates from the Xcel Energy and other entities. So there's quite a bit of money out there. So don't forget to look for it. Let us know if you need help because you don't want to do something and then realize you could have gotten money from the utility for it. That's always kind of a disappointing feeling. So we just had a couple case studies here that I wanted to really show everyone. This is a case study. When I was running Green Economy, we were contractors, so we did quite a bit of work in existing buildings. LED retrofits are your number one low-hanging fruit that you should be doing. And when you do an LED retrofit, you're having an energy savings uh, from like a 32 watt down to a 12 watt is a 66% reduction per lamp. It's pretty significant. You also have so you have energy savings and you have maintenance savings because LEDs run for 50,000 hours, fluorescents about 8 to 10,000, so you don't have to replace them as often. And then fluorescents create heat. So if you have LEDs, there's less heat in the space, so you have an HVAC savings as well. Total savings of all of that for this project was about $62,000. It has a 3-year payback, 32% ROI, net present value of 432,000, and an IRR of 30%. Now, that's a really good deal. If you consider that these retrofits that you're doing are going to increase the value of your property, because if you look at the total investment was 187,000, annual savings, as I mentioned, was 62, divided by a cap rate of 7, you've got an $895,000 increase in the value of your property. Pretty significant. So here again, let's talk about solar. So the investment tax credits, I've spoken to a lot of people recently who thought they were gone. They're not gone. They're still hanging on. The OBBB, One Big Beautiful Bill, did change the approach. Right now, we're in the FEOC period of these tax credits, meaning foreign entities of concern, certain materials of those different entities, China, Iran, Russia, and North Korea, you can only have certain percentages or none at all of the material from those countries, more from other countries, obviously. And right now, there is the ITC tax credits can be safe harbored if you join a contract, enter into a contract and pay at least 5% towards the project cost before 4th of July, then you have 4 years in which to implement and construct and start the project. So that's quite nice. If you do not safe harbor the project by 4th of July of this year, you have a year and a half in which to do the project, which is kind of tight, especially with you're expected to have it operational, and some utilities do take a while. So if you have any thoughts of having a solar project that you've been kind of thinking, maybe I should do it, maybe I shouldn't, let us know. We have a lot of people that we work with, and it does make sense to, if you look at this right now, you've got a 30% federal tax credit. There's 20% is federal bonus depreciation, 10% is state. Some cities and states have this IRA community tax bonus. I mean, this is 70% of the cost is tax benefits. In this case, this was a net price of 88.4. It was a 3.7 year payback, saving about 31,000 a year, a million for an annual savings. And this, if you divide it by a 5% cap rate, increase the property value at about 620,000. And it would meet those requirements that Denver had, where 20% of your building needs to be covered by solar. In this situation, 100% of it was. You can see it's a great building, even though there was HVAC equipment. We were designing it all the way around. If this is solar is a no-brainer. It is also a good investment. If these tax credits do not come back in the next administration, um, you're going to be sorry that you didn't safe harbor them. So let us know if we can help with that. So we here at VCA Green, we have this energy strategy. And since we at Green Economy had all been existing building folks, and the VCA existing green team was very focused on new construction, since VCA Consultants is a structural engineering company and also does code compliance. So we now have this full life cycle of services that we offer and expertise. So really with this energy strategy that we've designed here with this new bigger um, group of people and expertise and professionals is really that reporting and verification and making sure that it is accurate, that you can rely on that to make decisions on what's happening with your properties. We have a really nice building performance dashboard. So if you have multiple buildings, then you can see how they're all performing. It's really quite nice. Our second phase would be really focused on those improvement plans. How do you meet those building performance standards at the least cost, tied to also your life cycle of your equipment? We do audits. We help use the audits and the data to make those recommendations. And again, obviously, we're really focused on the money. Is there any incentives out there? Tax financing, credits and deductions. So we're all about that too. And then maintaining, right, is if you're going to do all this, let's make sure that the results are there, that you're seeing the savings. If you're not, why? Is everything as you had planned? Sometimes things go haywire. You have to be measuring and verifying to make sure that the results continue. You can't just leave it alone. So here it is, our final slide here is our building life cycle services. So you can see that we're involved in all these very specific areas for buildings, existing, new and existing buildings, and we're here to help you meet these requirements and with accuracy and confidence. Thank you for joining us.
Are there any questions? I just saw I see two questions. One is if we help on water reduction initiatives as well. since Denver just recently declared that stage one drought.
Yes, we
Hmm.
do.
And then Travis, do all the requirements apply to buildings over the given square foot size? What apartments, for example? Um, yes, yes, with minor exemptions. Um, Industrial, for example, I think that's the only exemption that I know of in Energize Denver specifically. Um,
It's manufacturing.
yeah, manufacturing.
Right. And
Um,
and that's pretty consistent with other benchmarking laws as well. Why is that? Because the metrics on a manufacturing building are very different from one to the other because of the process load that's occurring. So they've eliminated those out of these benchmarking laws because they want people to do manufacturing. They don't want to penalize them for that.
and also for apartments, any of them that are that 25,000 square feet or above in Denver specifically, multifamily apartments qualify as well. And then also there's the additional slide of the 24,999 to the 5,000 square foot. That's that um, lighting component requirement and the renewable requirement for those
Right.
buildings. And
Because of that renewable requirement, it's like I mean, that's pretty significant. So that's something to consider for anyone that's responsible and is looking at their data, wondering, am I going to meet those requirements and should we talk about solar? Like I said, it's a 5% investment right now, and you have 4 years in which to um, construct and implement and start this, put the system into service. And this is a federal guideline, right? These are federal tax deductions, and then you have state depreciation. But everything here there's a lot of, and when I said 70%, that's tax deductions, which come off the income of the property, and tax credits, which come off the tax liability of the property. So it can be quite a cash flow hit the year you implement the system. So it's something to consider.
they are allowed to do off-site solar as well. So
Yeah.
if you did a power purchasing agreement with community solar, that would probably be another way to mitigate because I know sometimes roof space is challenging.
Yes, this is true.